What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about SoFi, and this is going to be a very similar video to the one I made on Monday about Palantir, where we are going to be taking a look at analysts and what they are saying about SoFi Technologies. We're going to look at the good and the bad. We're going to take a look at price targets as well, and then I'm going to leave off the video by giving my opinion and what I am personally doing with my position in SoFi. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at SoFi's stock chart. We can see here today the stock moved up over 2.5%. If we look over the last 5 days, it's up almost 4%. And if we look at the last month, it is up almost 50%. However, we can see just a couple weeks ago, the stock peaked out around $9.74. And actually on the day, it hit its 52-week high, and that was $10.23. However, since then, the stock is down almost 9%. And if we look at the last 6 months, the stock is up almost 95%. And if we look at the last year, we can see that back in December, it hit lows of around $4.30. However, since then, it has moved up over 105%. One thing that has been going on in the market over the last couple of weeks is a lot of analysts have been looking at these stocks that have ran up in a massive way and started to adjust their price targets and their ratings on them. And a lot of the times they are adjusting them down. Now that the run has stopped, they are calling for this kind of pullback in the overall market, and we can kind of see that the S&P 500 has moved up almost 14% in the last 6 months. So this has been a good bull market so far this year, and a lot of analysts are expecting at least a small pullback in the short term, especially after Jerome Powell did not announce the intention of the Fed to drop interest rates. And we are seeing this happen with SoFi as well. One of the analysts actually came out and said that if growth starts to slow for their personal and business loans, that this will create a back-end margin overhang. Basically just meaning that their margin on these loans will decrease if we start seeing growth of the number of people taking out these loans start to slow. And along with that, the analyst cut his price target down to $5 on SoFi. We also have analysts from Piper Sandler, Bank of America, and Oppenheimer Holdings cutting their rating on the stock. We now have over half of analysts covering the stock sitting at a rating of neutral. In my opinion, these analysts are looking at banks, especially small banks, in a very negative light right now. And that makes sense due to a couple of reasons. The first is the Fed not showing any interest in lowering interest rates. That has a big impact on businesses and on banks and how they make their money. The second reason is obviously what we saw with SVB just a couple months ago. They do not want to put buy ratings on these small banks when there is the potential of those banks becoming illiquid. Personally, I do not see SoFi becoming illiquid, and one of the reasons for that is because of the student loans that are going to be restarting here in October. We're going to start seeing student loan payments due in October, and that is going to be a cash flow that is going to benefit SoFi, especially in the long term. And the reason I believe that is because before the pandemic, over half of SoFi's income was made up by student loans. The question mark for SoFi, however, is they have done a lot of very good adjustments to their business over the last couple of years. So really, how much are they going to rely on student loans going forward? They have obviously expanded into savings and checkings accounts, and I think that really exposes them to a lot larger market base that I think they want to keep those customers happy. And I think student loans, in my opinion, will take a little bit more of a backseat compared to expanding that side of their business. So when we look at what analysts are actually targeting for the price of SoFi, it's actually not too bad. We have a high price target right now of $14, a median of $7.50, a low of $3, and then an average of $7.96. Obviously, that average is a little bit lower than the current stock price, but it is nothing too significant. And if we look at analyst ratings on SoFi, we can see that there are currently 7 saying that it is a buy, we have 10 saying that it is a hold, and 2 that are saying that it is a sell. I did want to point out that 3 months ago, there were 9 analysts saying that the stock was a buy and 7 saying it was a hold. And those analysts a month later were still saying 9 at buy and 7 saying hold. However, it appears that one analyst jumped in and actually said that SoFi is a sell. And then if we go to where we're currently sitting, we have the 2 saying that they're a sell. So it appears that there are 2 analysts that basically just jumped into covering this stock and have said that it is a sell because they believe it is overvalued. It does appear, however, that we did have 2 that were saying it was a buy, probably dropped down into the hold category. So overall, the analysts who have been covering this stock for a longer time appear appear to just be saying that it was a hold and a buy, and we have a few analysts that have jumped in and basically are bearish on the stock and have said that it is a sell. And I think one of the reasons we see so much positivity around SoFi stock is because of the fact that they're getting very close to profitability. We can see that analysts right now are expecting negative 17 cents in earnings for this year, but if we look for 2024, we can see that the average estimate is 4 cents in positive EPS with a high estimate of 25 cents in positive EPS. So personally, what am I doing with my shares of SoFi? I have built out a big enough position where what I can do is sell a couple covered calls against my position and still have stock left over. So when the stock was running up just a month or so ago, I sold a couple covered calls around the $11 and $12 mark, and that has allowed me to collect some premium. And really, I'll probably continue doing that as long as SoFi kind of stays in a range of anywhere from $9 to $10 to $11, and that'll allow me to keep collecting this premium as long as the stock kind of trades sideways. If it shoots up and I get exercised on those covered calls, then I really don't have any problem selling SoFi at the current price. But really where I'd start evaluating my position and potentially selling out more of it is the $15 price. That's where I think we could start seeing the valuation getting very high, and it may make sense to actually start selling out of a portion of my shares. So with all of that said, keep in mind, do not buy a company just because some random person on YouTube talked about it. Make sure you are doing your own research as well as looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.